Are you thinking about whether you should keep renting or finally buy a home here in Grand Rapids? Well, with rents constantly rising and near highs for our interest rates in the last 10 to 15 years, it can be a tough call. Let's break down the facts and take a look at which one makes sense for 2025. You know, a lot of people feel stuck right now. With rents coming up and with interest rates rising, a lot of people are just not sure which way to go. Ultimately, as interest rates do rise, one of the things that we're seeing is rent is keeping up with the additional cost. So we're going to take a look today and see what's really going on in the Grand Rapids market. Number one thing we want to look at today, it's the numbers. The average rent in Grand Rapids is about $2,000 to $2,200 a month, and a mortgage on a $300,000 home today is right around the $2,200 to $2,400 a month, depending on what the taxes are. Obviously, taxes, insurance can be the variable when it comes to a mortgage payment on a regular basis. What we're starting to see is the monthly costs, they're fairly similar. However, one of these options, you're putting money into your equity as you start to go forward, and you're riding up the rising costs with more equity coming forward into what you have into the house. With the other one, you're doing that exact same thing, but you're doing it for the landlord. Number two, it follows suit. It's building equity. Every time you make a payment, that mortgage balance can start to go down. And what a lot of people do is they make one extra payment every single year. On average, on a 30-year loan, this can cut 6 to 7 years off the time it takes to pay the home back by paying that little bit of extra every single year. Eventually, as that money starts to accumulate, that equity becomes a big chunk of your net worth. In the rent side, you're definitely doing the same thing, but a lot of times it's your bill or it's your landlord's equity that continues to grow versus your own. Now, a lot of people say, well, Nick, I'm not trying to take any money out of my equity, so it's not a big deal. I can understand in the short term that might be the case. 10, 12, 20 years down the road, it could be a completely different story, especially when your equity could be $100,000, $200,000, $300,000 in the same home. Which one ultimately is going to put you in the better position as you go forward? Number three, it's an important one. It's stability and predictability. One of the things that we know on a 30-year fixed rate mortgage, your payment actually can fluctuate, but it's not the principal and interest portion of your payment that changes. It's usually the taxes and insurance portion. However, as a landlord myself and having rented for a lot of the years, we also know that the rent always goes up. If you've been renting here in West Michigan lately, you've probably seen it year after year after year, that rent continues to go up. If you've been in a place for the last 5 years, you've probably seen this compound over and over and over, especially as the cost of living has really gone up here in Grand Rapids. So ultimately, while the rent continues to go up year after year after year, it goes up on the mortgage side much smaller as you're only dealing with the tax portion versus the principal and interest. 10, 12, 15 years down the road, your payment will often seem minuscule in comparison to what that current rent payment would be, especially over time. Number four factor you definitely want to consider. Here in Grand Rapids, we really have an affordability advantage. You know, compared to places like Chicago, Denver, any of these giant cities, Nashville especially, as they've grown giant over the last few years, we have just a much cheaper cost of living. Our housing, for the quality of housing specifically, is so much more affordable. So we are really an advantage to a lot of people when it comes to buying a home, specifically versus renting. It really means you can get a little bit more house for the same amount of money. Last but not least, number five, making sure that you're in it for the long game. We know that when you're in a home over time, that you're going to see the same rate of appreciation typically that the area sees. And that's if you're not putting in that sweat equity like a lot of people do to their homes. The more you improve the house, the nicer you make it, the higher the value starts to go up. And again, when we start to look at it, the sooner you're into something, the quicker you can start building equity. And really, when it comes to equity, playing the long game is always a win. There's never a 20-year period where we can look at the U.S. real estate market and not see that homes have made money over that time. And a lot of times it's big money, doubling, sometimes even tripling in cost over that phase. Yet when it comes to that rent, we still see someone putting that money out month after month after month with nothing to show but that higher rent payment at the end. And so ultimately, the quicker that you do buy, the more time in the game you have and the more equity you're able to build. And that's money that can be really used for a lot of important things in the future, whether it's funding the next house or the lifestyle you may have in retirement or even putting kids through college. There's an endless amount of choices you have when you have a lot of equity built over time. You know, as a realtor here in West Michigan, I've helped a lot of people run the real numbers. And for most of them, it definitely makes sense for their life, for their family, for their situation to go ahead and buy now and start to build that equity. So if you've been renting and wondering if now is the time to buy, then reach out to me. My contact information is in the description below, and I would love to lay out all the options for you so you can make the right move for your future. I'll see you on the next video.